who's for the Emerging Payments Association and on behalf of the Inclusion Foundation. This is in relation to the work that we're doing under affordable credit, and it's going to be published in a paper in Q1 this year. I'd like to say thank you to Steve for joining us on this call today. And we're going to do a little bit about our 3 questions series. But before we actually start, Steve, could you give us a little bit about your background?
Of course. Thank you, Anne. It's a bit eclectic. I've been around the block a bit doing different things, but primarily I've always been involved in financial inclusivity. So the last sort of 20 years, I'm too old to remember the other 40. Very much started off in banking, became a board director of Unity Trust Bank, got very involved in CDFIs, community development finance institutions, did some work with the Homeless World Cup, which then ended up me getting very involved with the Big Issue Foundation. So I chaired the Big Issue for some 10 years. Always had a passion for change, always had a passion for financial inclusivity, but primarily using the financial services system for the betterment and creating first-class products. I then became a director and non-exec director of Ecology Building Society, which is the leading climate change mutual in the country, been going 40 years. I spent the last 3 or 4 years then creating cloud-based banking platforms for banks both in the UK, Europe and Africa, and looking at creating a unique ecosystem with other partners, which is something I'm sure we'll come on to later, about how we can create a fairer, more equal financial services, but also it becomes first class. Everyone wants first class products and services.
Fantastic. Wow. So we're going to start on our 3 questions now. We could go anywhere on this, but we're here on these ones. But can you tell us what you're actually seeing in the market, specifically in relation to credit limits?
Oh, I think there's no question that given the last 2 years and the pandemic, Brexit maybe as well, banks are reviewing credit limits quite substantially, reducing them. And access to credit is getting more and more difficult. Consumer credit, particularly if you're looking to buy things, seen a massive increase in deposits being taken, a lot more higher deposit being taken rather than or worse than historically that has been. And I think that's the risk. Yeah, I think there's a challenge for financial services generally in that we don't know, particularly with the pandemic specifically, Brexit maybe, the impact on unemployment, jobs anyway. And therefore the growth or potential growth of non-performing or bad debt. And I think that's the same whether that's in consumer credit or even mortgages. We don't know where furlough is going to end. We don't know what the issues are on furlough and whether businesses post the end of furlough will be making more and more people redundant. And then, of course, we've got lots of people, and I saw some figures, I think, recently from the Bank of England suggesting that unemployment's going up 5-6% or whatever it will be, or even higher. And that's a challenge. So banks generally, and I can blame the banks, but I can also blame the regulators in many ways, that post 2008 and 9, the banks have recapitalized substantially. And therefore, I think the ability to take on risk has been reduced. So I think that's a challenge for all of us at all levels, to be brutally honest.
I'm going to move to our next question, if that's okay.
Yes.
There's been a lot in the press around universal credit and the government's position and the hardships being faced by those that need it most. What's your view, and what do you think Fintechs should do?
I think from a purely practical point of view, universal credit was always conceptually brilliant and practically impossible to put in. And I think the concept all those years ago about having one payment seemed very sensible to many of us. But actually, I think it's been proved that the complexities of actually putting it in, and more importantly, the timing and the ability for people to use it. I think we have to start with the existing. I mean, universal credit was meant to not reward people for actually being on benefits, but actually rewarding people for going into work. I think we've seen on contracts, I think we've seen on reduced hours that that's almost impossible. And I forget the figures now, but a substantial number, I think the majority of people who are taking universal credit are in employment of some form, and they have maybe 2 or 3 jobs. And I think that, it's as usual in these things, there's always a balance. But I think that the challenge for the government is with this extra £20 a week, which, let's be brutally honest, is not an awful lot of money for someone with 2 or 3 children. So I think the challenge is, how do we make universal credit better? How do we make it quicker, more relevant, and get into the right people at the right time? And I think fintechs generally have a role to play, both internally within the system. I think there's no question that the ability for government and the DWP to pay out quickly seems very limited to me. And I'm not sure whether technology fits internally with them. But I don't see why that should be, but there seems to be a fintech bank government. And I think, I believe that the fintechs can help with what they've learned on technology, access to market, and low cost of transactions. That's got to be a learning curve that can be brought back into government, so we can get people back out and into really getting the money when they need it. And I think that's the most important point. Most people don't want lots of money, but when they need it, they need it. And the challenge, I think, for us as fintech providers, or people who are in fintech who are a lot younger than me, is how do we really use our skill sets, our knowledge and our experience to actually help people in universal credit? And I think there is an education piece, to be brutally honest. I go back to some of my days in Saudi and also in Uganda, where it's all right having the great tech, the iPhones and whatever, but actually education on using that tech, education itself, I think is fundamentally important. I think sometimes the fintech community, because a lot of them are, a lot of us, should I say, are young and trusting and whatever. The reality is that not everyone understands the way it works. It's very easy to think that technology is the solution. Technology it can be a great enabler, but do not underestimate education at all different levels. And we find it in Cascada as we're talking to people who want to set up new banks, new EMIs, and there's a lack of understanding of banking as well, how banking really works.
Yeah.
And you can be blinded with all the fintechs that are out there. We do this, this, and this, and then you suddenly find actually the core banking element isn't done. That's somewhere else. That's another cost. So even at an intelligent level where people are getting funded, invested in for about 10, 20 million, are still missing out because there's a lack of understanding, and people tend to take a quick view of things now. But, I think that the challenge for us, on going back to your original point on universal credit, is we have to rethink it generally about how we do things. But I do think fintechs could get closer to government to see how we could help distribute. But also, I think, how do we help educate? Going back to your point.
Actually, that brings us lovely to the our last question. It's, what's your view on the future landscape and the role particularly that mutual companies might take?
Well, I think as chairman of it's interesting. I sit with 2 hats really. I sit with the PRA as chairman of a building society that's been going 40 years. It was the last that was set up. And when it was set up 40 years ago, there were 268 building societies. There are now 43. Now that tells you one or two things. One, they've all amalgamated, or the model might be quite flawed. But I'm asked questions on a 40-year-old building society from my capital adequacy, all the technical issues you want, your risks and whatever. I then sit the day after with a new bank with the PRA, and we're putting the platform in, and they're allowing lots of things. Oh yeah, that's fine, do it this way. And I think there is a general mismatch between the regulators for existing banks putting more and more restrictions on, but then wanting new competitors to come in, but actually allowing those competitors away with not as robust technology, not as robust risks covered as they were before. So I think the challenge, and I know people want competition, but real competition is real competition. Just having a number of people in there isn't real competition. And if we look really at the players that are out there. And there are some really good fintechs and whatever, but the vast majority of individuals still bank, if I look at current accounts, with the main players for their full banking. Now that can change, and that will change. But I think the role of fintech, if we believe that we want to change the market, is you either become an agitator to change, but you'll never be the big player if you're just an agitator to change. But that can then drag the main players forward as well. And I think that sort of partnership approach where we as fintech can drive those quantum changes forward. Yeah, we shouldn't expect everyone just to follow us. What should happen is you try and mainstream financial services, because we as fintechs, yes, we all want to be successful, but actually the reality is what we want is a really robust financial services system that can benefit all people. And the big players, the main older players, still have a role to play in that. You know, and I don't think we should shy away from that. It doesn't mean we can't have our own market share and new entrants and whatever, but the reality is that partnership approach, and we find that a lot with Sascada, working with existing banks and new players, it's important that you bring those together in a way that actually creates that change and moves the market forward. And I think that's the challenge for us all as fintechs. Everyone wants to be a Monzo or a Revolut. The reality is they've gone. They're where they are. You know, we've got to build robust, sustainable businesses. If we're in fintech just to actually get that quick 5 years and then exit, my question will be, what value are we really going to add to the overall financial services sector and to the people we want to serve, or the people we say we want to serve on all the websites that I see?
Oh, thank you much, Steve. That's brilliant. I've enjoyed our discussion, and thank you for joining us.
No, and as usual, always happy to talk.